Good morning, and welcome to Coffee and Conversations.
Good morning.
I am Alicia Richardson.
And I'm Juanita Winky Kennedy.
And this morning we have with us Miss Brenda Davis from Homeside. Did I say it right? Homeside.
You said it right. You said it right.
I was getting ready to say something else. Yes, good morning.
Homeside Financials.
Good morning.
That's what we are.
Yes, so I want to first say Miss Mashana is not with us this morning. Please keep her in prayer. She's in North Carolina and she's experiencing the aftermath of Debbie, and she has a power outage, and we just want to keep her and everybody on that side. North Carolina, Florida, Georgia, South Carolina, parts of Virginia, and of course us in Maryland.
We're praying for you.
Because we do have the rain.
Yeah, we do have it too.
Yes, we just want to keep everybody in prayer from this storm. But this morning we have the honor. You know what? I was supposed to play a little video first. My video didn't play. So I'll have a commercial the next time you guys log on to Coffee and Conversation. We're trying to do a little something different.
All right.
But this morning we have the honor of talking to Miss Brenda Davis. She is a mortgage loan officer for, like I said, Homeside Financial. And I just want to ask, well, you could do a quick little intro and then, tell us about your business and how you began and all that.
Absolutely. Good morning, ladies. Good morning, Juanita. Good morning, Alicia. Good morning, everyone. Yes, so I am a senior mortgage loan officer. I enjoy what I do. I've been doing this for a little over 20 years. Ooh, and currently I'm with Homeside Financial.
A long time.
Oh, I've been doing it a long time. Yeah, tried to survive, through the 2008 market, crash. But, we just keep moving. We keep it moving because we know that there are not thousands, but millions of first-time home buyers out there that still want to purchase homes. Yes, so that's what we're here for, to help them. I'm here to get them pre-qualified as quickly as possible. And like I said, I love what I do. So I started out, like I said, in the business. Previously, I've worked for attorneys in downtown DC for about 18 years. And then I moved on to become a loan officer. I've worked for several different companies. Basically, you kind of, build your own clientele by meeting wonderful realtors such as yourself, right? I built a pretty big database of real estate agents that send me business. And I take care of the clients, again, by getting them pre-approved for purchasing a home. And the process is not long at all. The way that I get people pre-approved, I usually take their information over the phone, or I send a link, which you guys have that as well. I send them a link that they can complete online. It takes all of 5 or 10 minutes, either way. And once I get their application complete, I get their documents right away. And that is the completion of the pre-approval. The pre-qualification process is when I take their information for the application. Okay. Ooh, okay. So a lot of people, they're like, well, what's the difference in pre-qualifying and getting pre-approved? And that's the difference. A pre-qualification is pulling credit. Once you get the application complete and you look at everything, you analyze everything, you run the file through desktop underwriting. I'm sure you guys have heard of that. So you run it through DU, you get an approved eligible, which means you just have to satisfy what those findings say, which is just compiling the documents to complete, the pre-approval process. And that's pretty much it.
Okay. All right, Miss Brenda. So do you still see a lot of people purchasing homes right now, or do you see more restructuring of their mortgages, like refinancing and things like that? What do you see right now in the market?
Yeah, so people, of course, we know that the interest rates, which, by the way, I think you guys have seen, they're going down.
Yes.
Right?
Yes.
Come
on, do not wait.
Let's do it.
They're going down. Thank you. So we probably won't see, that 2.5–3%, of course, that we saw a couple of years ago.
I doubt that ain't coming back.
Right. But we're not going to see the 8%, which I'm sure you guys, saw that maybe just a few months ago, or even the 7%. You do still have individuals that are refinancing, that are looking to pull cash out. All right. Not too many people are refinancing to lower their interest rate. I mean, because no one has a 9 or 10% interest rate, right? especially,
we would hope not.
Right.
We would hope not. You never know. They could have an adjustable rate, though.
Yeah.
They could have an adjustable rate. That's true. That's true. But even with an adjustable rate, they can go into a fixed rate and their payment would be much higher.
Yeah.
You know what I mean? Because if they have an adjustable rate, more than likely their rate is lower than what the market rate is today.
Right. Understood.
Right. So, but you still do, you know, there was somewhat of a pause for individuals, whether they were first-time home buyers or repeat buyers, somewhat of a slowdown, you know, with the rates increasing. But again, individuals realize, you know, well, I can't sit forever. I don't know when the rates may go down. So what I would tell people is go ahead and purchase, especially if you see something that's affordable, right? If you see something that's affordable and I have you pre-qualify for that amount, you can always purchase that home and refinance later.
Right.
Right.
So a lot of individuals that purchased last year, guess what? They're going to refinance because the rates are going down.
Right.
Right. Understood.
Right.
Right. So let me ask you something. What kind of documents a first-time home buyer, what should they prepare to before they come to you? What should they gather up? What kind of documents should they gather up? You know, should it be their taxes? What should they gather up?
Yep. So, you know, sometimes before they even complete an application, I tell them this is what you want to do. You want to compile your income and asset documents. And I send them an email with a short list of documents. And it is your last 2, or sometimes if you're using a down payment and closing cost assistance program, they require 3 years of W-2s and tax returns. All right.
Okay.
For individuals that are self-employed, we absolutely need their tax returns because we need to see the schedules C, right?
Right.
To see just how much income, you know, whatever they've written off as far as their expenses, we use the bottom line after that. Right.
Okay, got it.
Yep. So we'll need tax returns, 2 to 3 years of tax returns, 2 to 3 years of W-2s. We need the 2 recent bank statements. We need 2 recent pay stubs. And we need, if they have a 401k and they plan to use that to withdraw money, or even if they don't plan to use it, if they just want to use it as assets to strengthen their file, then we ask them to send their most recent copy of their retirement statement, whether it's a 401k, if they have a TSP,
or 403B, or
403B if they're a teacher. That's correct.
Right.
And then I get their driver's license.
Okay.
For identification purposes, and that's it.
Okay, so currently, do you have any type of interesting programs out there that are coming up?
First-time buyers.
Yes, to help.
They need your help, Miss Brenda.
But even after first-time buyers, to help some of our, I don't know, the lending industry considers them rich buyers. You know, if you got a certain amount of income,
everybody might still. I don't care how much money they have. They might want some help.
Right. So, everybody needs some help. How can you have some programs?
Yeah. Well, so yeah, of course, for first-time home buyers, we've got some great down payment and closing cost assistance programs. One, it's not necessarily a program, but it's a loan product that we offer. And I'm going to say, I'm not so sure, but I believe that not too many lenders offer what's called a single unit approval. And that's for condo purchases, right?
Oh, wow.
So we know that in this area, right, and especially in Prince George's County, that probably, what do you want to say, maybe 85–90% of the condos are not FHA
qualified.
Right?
Yes.
They're not FHA approved. So you have a lot of individuals that may qualify for only a certain amount, right? I may get their income and asset documents and say, okay, well, they only qualify for maybe, let's just say 250, 300,000. And so it's like, okay, it may be difficult, maybe not, to find a townhome that they like, right? Or that they, that they want for that amount. So I tell them, you may want to look at some condos. So again, we have a specific condo department, all right, where I send them the name. Yeah, as a matter of fact, Tyrone and I are working on one.
All right.
So,
all right.
Yeah, and we're able to do it. they're not approved, although that client is not going FHA. So we're able to do, we're still able to do a conventional loan with only putting down 3% for that condo.
And that's called single unit approval.
All right now. So my first time home buyers,
yes,
single unit
because it's a lot of people right now. Their qualification amount can't go over 300,000.
Exactly,
and it's going to put you in that condo category. But that condo category is like, oh no, we need 10% down.
And condos are still really good because what people don't understand is that if you can't buy the house that you really want
right now,
you get that condo, and that's your starter house.
Yep,
that's correct.
You keep that a year or two. And then you use that as a springboard to get the house that you really want.
Yeah.
Put you a renter in there, and now you have two properties.
Yes.
It's a plan. It's a great plan.
You have an investment property.
I tell people that all the time. You're not going to always start out with the 4-bedroom, 5-bathroom. It doesn't always start out like that. But small beginnings. My pastor always says small beginnings.
Yeah,
that's right. That's right. And as a matter of fact, the client that Tyrone and I are working with, that's what I told her, because she's like, oh, I'm not liking this. I need 3 bedrooms, et cetera, right? I want more space. I want this. So, and I explained the exact same thing that you just mentioned, Juanita, to her.
Yeah.
And then it's like, oh, the light bulb came on. I said,
they don't know. There's a lot of people that don't understand that, and everybody's head when they're searching. I know everybody's seen this post on social media. I want a 6-bedroom house with 4 baths with the pool for
$150.
Yeah.
It's not happening. My first time home buyer. It's not happening.
Right. Yeah. So if you want that, let's start at the beginning. The beginning might be a condo. And you do want to try to make sure you have limited condo association fees. That's another kind of a headache, but it's just it gets you ready and prepared on how to pay and maintain a property that's your property. That's one of the things. It's a learning lesson.
And guess what? For a first-time home buyer, it's what? Low maintenance.
It's low maintenance.
Because, very low maintenance.
Yeah. I mean, what could really, I'm not going to say couldn't go wrong, but what inside of there, because you're only taking care of the inside anyway, as far as the roof and everything, that is normally on the condo association to prepare the outside of the unit. So everything on the inside is yours.
Yeah.
So read your condo documents carefully, but normally that's the way that it is.
And the insurance is lower.
Yeah,
right? Because you only need what we call HO6, an HO6 policy, which means it's just wall to wall, right? Not anything on the outside. So you may end up paying $35 a month, which is included with your monthly mortgage payment.
Right.
Exactly.
The biggest fee that you will pay probably will be that condo fee.
Right.
And then sometimes it includes utilities, which is even better.
Some condos, and sometimes it includes water.
Yeah,
sometimes
that's true.
Water.
If it includes utilities and you already know this is what I'm paying every month, hey, I'm good. So it's different things. Condo is not, a lot of people hear condo and they're like, oh, no. Yeah. Condo is not a bad word. It's not a bad thing.
But during COVID, I noticed there were a lot of people purchasing condos. I thought that to be, they were hot.
Yeah.
As fast as they came, they, were, gone. But I think that's a really good option for somebody that doesn't have a high amount that they're approved for, to just start small and then graduate. So my next question is, are there any 100% loan options available? And can you kind of explain, because sometimes my home buyers don't understand that 100%. Come on, Brenda.
It doesn't mean
break it down in layman terms. Come on now. We want this to be understood by everybody.
It doesn't mean you don't have to put no money in.
100% loan options. What are they, and do you have any?
Okay. So we know that there are actually 3 different types of 100% financing, right? Okay. So the very first one would be a VA. Right?
Okay.
And that only applies to an individual if they are a veteran.
Right.
All right. And, after I finish with the 3 different types, I want to talk about that 100% financing, right? Versus putting some money down. Right. Okay. So then you have USDA, right?
Right.
Which only pertains to property that's located in a rural area.
Yeah.
Now, a lot of people not the property, right? But a lot of people may not, I want to say consumers may not qualify for a USDA because they have low front and back end ratios.
Right.
So they may find a property and say, hey, this property, you know, you may send me something and say, hey, this property qualifies for USDA because I will send you the link, you know, where you can put in the property. But the individual may not qualify for that.
Right.
Because their front and back end ratios may be high, right? Or just higher than the USDA, which again, those front and back end ratios are low. Right. I want to say it's like 29. I can't think off the top of my head. 29 on the front and 37 on the back, which you guys know that's low.
That's low.
Right.
Wow.
Yeah.
So it's something. It's something like that.
Yeah.
All right.
I know the qualifications are strict.
Yeah.
Yeah.
And income.
And income.
Yeah.
Yep. They have income requirements as well.
So 100% loan to financing. Does that mean if I buy this house for $100,000, I'm just saying, hypothetically, are you giving me $100,000 to buy it? Explain that, because a lot of times people get that really misconstrued, not understanding that the closing costs are separate.
So no, you'll still need some money into the transaction, whether you are able to. I'm just trying to think. You can't use the Maryland Mortgage Program or any down payment or closing cost assistance program if you're doing 100% financing. Right? Because you're qualifying at 100%, meaning you're not putting any money down. Right? Now, and then I take that back because a veteran can apply for M&P to help with their closing costs. Because
only a veteran.
Only a veteran can get the help with the closing costs. Okay, got it.
But a conventional or an FHA loan, if the buyer wants to use M&P, it won't be 100%. We do have programs that are 100% financing. Again, meaning there's no money down. So there's a difference, right? Because a lot of people are like, oh, well, I have to come up with money. Yeah, because your down payment is different from your closing costs.
Absolutely.
Right.
And I explain to people, a down payment is, hypothetically speaking, if you purchase a home for $100,000, and you use an FHA loan, your minimum requirement is 3.5% down. So what you do is take 3.5% of 100,000, right? You multiply that. That's your down payment, and that's what will be subtracted from the $100,000
for your loan amount. Absolutely,
right? Which would leave you a loan amount again for FHA. There are other things involved, you know, with your total loan amount. You have to add back in once you subtract the down payment of 3.5%. Then you have to add back in 1.75% of the upfront mortgage insurance premium.
Right.
If you do a conventional, for a lot of first-time home buyers, all right, and again, depending on the credit score, because there's so many different caveats or criteria that needs to be met, right?
Right.
Qualifying for a loan. So, but for a lot of my first-time home buyers, they're able to only put down 3%, right? And so you take that and subtract that amount, right, from 100,000, it leaves you with just a flat loan amount because there is no upfront mortgage insurance premium because it's conventional. Okay.
Right.
But what people don't realize, when you have 100% financing, you're going to be paying a lot higher. Your monthly mortgage payment would be higher if you didn't put any money down.
Right.
So you're going to be paying on 100,000 versus let's just subtract.
You can whip out that calculator.
Yeah. Come on, give us that figure.
Versus 96,500, right? So you're going to be paying on a mortgage amount of 100,000 versus 96,500, right?
Right.
So you I have to show them it's not advantageous, not always, advantageous to do 100% financing. A lot of people may need it because they don't have the money to put down. Right. They may have some money to go towards closing. You, as their real estate agent, may be able to get some closing cost help.
We're gonna get
from the seller. Yeah, you may be able to do that.
We're gonna work hard to get it.
I know. It's hard in this market. It's hard in this market. It's hard. So yeah, I try to get them, to understand that. And I always say, if you're able to get any funds, whether it's through gift funds, or if you're pulling some money out of your retirement, and there's a benefit to that, because they're like, oh, I don't want to touch my retirement. And I explain, the tax benefits, right, of purchasing a home, right? That's why we call it a tax shelter. All right. So, and I tell them, you will end up putting that money back plus, right?
Exactly.
Right.
Exactly.
Yeah.
And I think that people need to understand too, like even with keeping all of this money into your 401k or whatever the case may be,
it depletes.
Well, if the market goes up and down, you constantly lose and gain money, right?
That's true.
So taking some money from a 401k and using that to purchase a home really benefits you in the sense that you're going to be paying it back to the 401k, but you still have the ability to get extra interest on the 401k over time. So you don't lose. Now, if you have 100,000 in there and the market happens to crash somewhat, well, you could lose $20,000, $30,000, $40,000 easy. And then what has to happen? It has to wait to build back up. So why not take some of that money that's sitting there, right, for you to retire and use it for your benefit prior to you actually retiring?
Yeah,
that's right.
Because that 20 or 30 that you just lost could have went to purchase
exactly.
Yeah.
Doesn't make sense.
Well, not only that, what I explain, that's if they get a loan, right? A loan from their 401k. I let them know you're paying yourself back. It's at a lower interest rate, but you're paying yourself back.
That's very true.
But more than anything, at the end of the year, right? Mm-hmm. Let's just say, they purchased in January. At the end of the year, they will be able to see a huge tax write-off. I don't want to say huge, but bigger than what they had before they purchased the home.
There you go. Mortgage.
Because you not only get to write off your property taxes, but you get to write off the interest, right? That you pay every month with your mortgage payment.
That's right.
So if you're paying let's say $300, a month in interest, right? Then that's what, $3,600 that you get to write off in addition to your property taxes. And I explained to them that you will get a 1098 at the end of the year from your mortgage company, right? So that you can see the amount of taxes that you paid and the interest that you paid. And you just simply take that to your tax consultant and give that to them, and they, add it to your taxes. So now you have a write-off that you didn't have before.
Absolutely.
Exactly.
That's a big advantage. Yeah.
Now, I have a question, because I had this question posed to me. So let's say someone is getting 100% loan. They know they're getting 100%, no down payment. They have the money to pay their closing costs if we don't negotiate closing costs on their behalf. But then they say, well, can I just put some money towards the loan to buy it down, to either, what did they say, buy down the interest rate, or just make the loan amount less without changing the loan from 100% loan? Is that possible?
I've never heard
so that. They can buy down. I've never heard of that. So they can buy down their interest rate, right?
Right.
If they're using, however, if they're using any down payment or closing cost assistance program, because again, the DPA doesn't necessarily have to go for the down payment. It could go towards the closing costs. With M&P, only with VA. Okay. Right? Only with veterans, because an FHA loan and a conventional loan require, either 3.5% or minimum 3% down for conventional.
And that's what I told them. I said, there's a requirement to how much you can put down. So their thought process was, let's say the house was 100,000, and they're like, well, I only want to finance 90,000 of it. So I got 100% loan. Can I just give them 10,000 to get it to the 90,000? And
then it wouldn't be 100%.
Right. And that's what I told them. I said, you're really restructuring your loan, but they didn't want to do. In their mind, they were hearing that percentage rate, and they were like, I don't want to do a 3% down. I just want to give them what I want to bring it down to what I want it to be.
Oh, yeah.
I found that people, when they want to buy down like that, there's other ways to strategize with the lender. You got to have somebody to explain it to you.
Right.
Absolutely.
But you don't have to give up unnecessary money.
Absolutely.
For the transaction too. That's one thing that people do a lot. And I just don't understand
all the time. Yeah.
Yeah. So, I mean, whatever type of, I mean, whatever the purchase price is, right? If they've been approved for 100% financing, let's just say I have approved them for 100% financing, but then they say, well, I want to put $10,000 down, then it's not 100% financing anymore.
Right, right,
right.
It's
Exactly.
not 100% financing. It's, you know, if you're putting money down, 100% financing is no money down.
Right, right. And that's
no
like
money down.
Exactly.
Well, the person
but they
asked me
still
the
pay their closing.
Yeah.
Outside of that, and that's the thing that people think, because the closing is separate, a whole new different caveat.
Yeah. Well, he knew he had closing. He knew he had closing, but his thing was he didn't want, and it wasn't $100,000. It was like a $300,000 house, and he was like, well, I only want the loan to be like for $250,000. And I was like, okay, then you need to.
Well, he need to call Brenda. Brenda tell him how to strategize with that $50,000.
Yeah, absolutely.
Absolutely. I said, you just can't.
100%.
It doesn't work like that. He was like, well, I can't just pick an amount and say, this is how much I want my loan for. I said, no, if you want a $250,000 loan, then you find a $250,000 house.
Right.
Like, you know.
Yeah, that's true too.
Because he was like, I'm going to pay my closing, but I can get extra money. I just want to pay it down to $250,000. I said, I don't think it works like that.
Yeah. And it's okay. It's really okay, especially, you know, I mean, sometimes you even have repeat buyers, right? I was gonna say, it's okay, you know, when you guys send people to me and they don't fully understand.
Right. Because I mean, through the process, it's about really working with someone that is going to educate you through the process. And that's what we do here at AMR Elite Realtors with Taylor Properties. I mean, we educated, informed buyer is the best buyer. I'm not going to give you your documentation and not explain to you each document that I say and say just sign here. I want you to know what you're signing. I want you to understand what you're signing before you sign it.
Absolutely.
Because, you know, an informed buyer, it's just an informed buyer, even a person that's selling their home.
Yep.
Informing them and letting them know what the deal is ahead of time is how we operate here.
Yeah. Now I will say we're not lawyers. No. And we're not mortgage lenders.
No, we're not.
But we understand the documentation enough to explain it to you. And then from there, if you want to seek your legal advice or seek your mortgage lender and ask those questions, that's what they are there for. That's why we partner with trustworthy partners to make sure we get you the information that you need to move forward with the educated decision.
And be informed about the process. Because a lot of times people don't know, even with, you know, we throw a lot of acronyms out there, EMD, you know, FHA. Of some buyers do not understand what that is. And so, you know, I would say earnest money deposit. You know, I will backtrack with someone that is a first-time home buyer just so that they understand the process.
Yeah,
we're realtors, and that is our responsibility to make sure that buyers and sellers are informed and understand what they're signing.
Yeah,
well informed. Yeah. I take pride in my borrowers telling me at the end of me explaining everything, wow, the last lender I talked to, they didn't explain it that way.
Right. I take
pride. It doesn't take that long, right? It doesn't take that long at all. And I'm like, because I want you to be clear. Yeah. I want you to understand. And if you think that I've left something out after we get off this call, if you have any questions, you know, that you think you forgot to ask or what have you, text me, call me back, or just, you know, send me an email and I'm going to answer your question. I want you to be clear on the whole process from the time I take your application until you get the keys to that home.
Right.
All right. That sounds great.
Look, I know when I work with some of my clients after we're done, they're like, oh man, I think I could be a real estate agent. I said, I made it look that easy.
Yeah.
It's not that easy. It's a compliment, but it's not that easy.
And that's
a lot involved.
Right. So, Miss Brenda, give us some info on how we get in touch with you.
Yes. Email, contact information, website, all that stuff.
That's right.
Okay. So let me give you my cell number is the best way to reach me. And that's 703-307-1360.
Okay.
And I am not in Virginia. I'm right over here, as a matter of fact, over the National Harbor. I wish you guys could see this view. As a matter of fact, let me see if I can turn it around a little bit.
Ooh, yes.
Right here.
View. Wow. I love it.
That's
I
nice.
love it. I've got my little terrace here. They have the chairs and the table, really nice chairs and table, but they're further up. And I usually drag them down here, and I'll take my laptop and go out there. And
That's nice.
When it's not 100 degrees, right?
Yeah, because lately it's been really, really hot.
Right.
This is a wonderful, wonderful spot. You know, a lot of my clients, my referral partners, such as yourself, and we've got to do this. I think I already told you guys, you know, I'd love for you to come over here and pick whatever spot so we can, you know, have lunch. And I also do the same thing with some of the borrowers, you know.
Right.
So
that's a good thing.
Yeah, we have a wonderful conference room over here as well. Okay, so that's my cell number. Mm-hmm. All right, okay. And then the website is I can't. Just go to Brenda Davis. I think it's Brenda Davis. Hold on.
Okay. All right.
I'm gonna have to send that to you.
I'll tell you what, we're gonna add it on.
Yeah, we'll put it
on the bottom of the screen, and so that everybody has your contact information, because we definitely want them to be able to reach out to you. Absolutely. And be able to come sit in that office and look over that beautiful terrace.
Yes.
And get pre-qualified.
Yes, absolutely. So my email address though is bdavis. It's real easy. It's bdavis at homeside.com.
Okay.
All right. And then I'm also on Instagram at Your Lender Lady.
Okay.
So they can send me a message on Instagram. What else? And like I said, you know, you guys, I'll send you. I think you do have the web address. It's weird.
Yeah, I think we have it. We definitely have it.
Yeah.
Yes.
So everybody, thank you so much.
Yes, let's do it.
Let's do it.
Yes,
rates have gone down, and they're supposed to go down even more.
That is a good
thing. I'm excited for these home buyers and these repeat home buyers. I also work with investors, just so you guys know. We have the DSCR loan real quick.
Yes.
Yeah, I have it all. So we do it all. And like I said, you know, my biggest thing is just making sure that whoever is buying, that they're happy with this process. I have a wonderful team that I work with as well. They're phenomenal. So like I said, we take care of you guys.
All right now.
Thank you.
All right.
So they got to call Brenda over there at Homeside.
Yes.
And so what are we, Alicia?
We are reliable realtors
providing exceptional service.
No need to go far.
Come on down to AMR. Come on down, y'all.
Thank you so much.
Brenda. Yes. Have a great day now on purpose.
Yes.
Right.
Yes. Again, you heard interest rates are dropping. So give us a call so we can start getting your whole thing set up so you could be moving into your home. Well, I'll say as soon as possible.
Before Christmas and Thanksgiving.
Absolutely. So you
can the holidays are coming up, right? So get out of that renting. Renting is nothing, okay?
Yes.
If you're going to rent to someone where you can make a profit off of it. But you yourself, it's time to buy. Throw your hat in the ring. You can do this.
So and one last thing with them buying the home, like you guys were just saying, the holidays are coming up and everything. Juanita can attest to this. We take less than 30 days normally to get the whole thing done. From
30 days
approval to getting your keys. We just did a deal, but it took 2 weeks, something like that.
2 weeks.
That's good. That's good. That's good.
Thank you.
But all of Miss Brenda's information will be in the comments under this video. You're welcome to reach out via comment or via directly to her or to us. Well, we'll have you. Of course, you can find our information everywhere you look, I'm sure.
That's right.
But we love you all. Thank you for spending the time with us again this morning. And we'll see you next time on Coffee and Conversations with AMR Elite Realtors.
All right. We love you guys. Keep watching.
Peace and blessings, lady. Have a wonderful day.
All right.
Bye-bye.
All right. Bye-bye.